Right now, at this exact moment, there are people earning money in their sleep. Not from crypto, not from a side hustle, not from some complicated trading strategy that requires a Bloomberg terminal and a finance degree. From one simple decision they made once and never had to repeat. While you are watching this video, their money is compounding. Their dividends are reinvesting. Their index funds are quietly accumulating fractional shares of thousands of companies across the global economy. They are not watching charts. They are not checking apps. They are asleep, at dinner, on holiday, living their life completely normally. And their net worth is growing. By the end of this video, you will know exactly how to make the same decision. The account, the fund, the automation, the complete setup, explained simply, step by step, so that tonight you can start building a system that works whether you are awake or not. Let us get into it. There are two types of money in this world. The first type is active money. This is the money you trade your time for. You show up, you work, you get paid. The moment you stop showing up, the money stops. Every dollar of active income requires your direct personal involvement to exist. This is the only type of money most people ever have, and it creates a trap that is almost invisible until you are deep inside it yet. Because here is the problem with active money. It has a ceiling. There are only 24 hours in a day. There are only so many hours you can work. And when you are sick, when you need a break, when life happens, the income stops with it. The second type of money is passive money. This is money that works independently of your time. Money that generates returns whether you are awake or asleep, whether you are productive or not, whether you showed up today or did not. This is the type of money that separates the people quietly building wealth from the people who will work until they physically cannot anymore. And here is the part that most financial content never says clearly enough. You do not need to be rich to start building passive money. You need to be consistent. And consistency, unlike capital, is available to everyone. Here is why most people never make the switch from active to passive money. They think passive income means real estate empires, rental portfolios, dividend stocks worth hundreds of thousands of dollars, something that requires significant capital to start and significant expertise to maintain. So they wait. They tell themselves they will start building passive income once they have more money, once they have paid off debt, once the timing is better. And here is what happens while they wait. Nothing. Absolutely nothing. Because passive income, unlike active income, is entirely built on time in the market. Every month of waiting is a month of compounding that you cannot recover. It does not come back. It does not catch up. It is simply gone. The people earning money in their sleep right now did not start with more money than you have. They started with less, and they started earlier. That is the entire advantage. Nothing else. Here is the complete setup, step by step, completable this week. Step 1. Open the right account. In the USA, open a Roth IRA with Vanguard, Fidelity, or Charles Schwab. Free to open, takes 15 minutes. Your money grows completely tax-free inside this account. Every dollar of passive income it generates, you keep. In the UK, open a stocks and shares ISA. Vanguard UK, Hargreaves Lansdown, or AJ Bell. Same principle, tax-free growth. No capital gains tax on anything you earn inside it. In Canada, open a TFSA through any major bank. Tax-free savings account. Same tax-free compounding benefit, available to every Canadian resident over 18. Step 2. Choose one fund. This is where most people overcomplicate things unnecessarily. You do not need multiple funds. You do not need a sophisticated portfolio. You need one fund. In the USA, VTI, Vanguard Total Stock Market ETF, 0.03% annual fee, tracks 4,000 US companies, fully diversify instantly. One purchase. In the UK and internationally, VWCE, Vanguard FTSE All-World ETF, tracks the entire global stock market, over 3,500 companies across 50 countries. One purchase. In Canada, VEQT, Vanguard All Equity ETF Portfolio, global diversification, one purchase. That is it. One account, one fund. The rest is automation. Step 3. Automate the contribution. Set a standing order from your bank account to your investment account. Choose your contribution amount, we will talk about how much in a moment, and set it to transfer automatically on payday. Before your salary lands in your spending account, before your brain registers the full balance, before any spending decision can interfere. The moment your income arrives, a fixed percentage moves automatically into the fund. You do not see it, you do not touch it, you do not decide whether to send it this month or not. It moves, every month, automatically, forever.
Here is the question everyone asks at this point. How much should I invest? And here is the honest answer. The amount matters far less than the consistency. $100 a month invested consistently from age 25 becomes $262,000 by age 65 at 7% returns. $300 a month becomes $786,000. $500 a month becomes $1,310,000. Start with whatever you can automate without disrupting your essential expenses. Even $50, even $100. The habit is worth infinitely more than the perfect starting amount, because the habit grows as your income grows. Every raise, increase the contribution. Not by the full raise amount, by half. Keep the other half for your lifestyle, but send half straight to the fund before your lifestyle expands to absorb it. Year 1, you invest $200 a month. Year 3, you invest $300. Year 5, you invest $450. The number compounds alongside the investment, and by the time the numbers feel significant, the system has already been running quietly for years. Let me leave you with the number that makes this impossible to ignore. If you are 25 years old and you start investing $344,000 of your own money, the other $642,000 in your account came from money working while you slept. 4 times your contribution generated automatically, without a single additional decision after the first one. That is not a prediction. That is the documented, historical, repeatable result of the mechanism I just described. Running silently, working continuously, compounding relentlessly, while you lived your life.
Here is your one action for today. Open the account. Not next week, today. 15 minutes, free. The account existing is the entire first step. Drop in the comments what country you are in, USA, UK, Canada, or somewhere else, and I will tell you exactly which account to open first. Subscribe for a new video every week, because this is exactly what we do here. The real setup behind real wealth. I will see you in the next one.